It's 2024, and what is 2024? Hey, it's an election year! And election years are big years because they introduce a whole new level of uncertainty and volatility to the market. Buyers are stuck in a what ifs of the policies or what candidate's gonna come in that once the market comes past midsummer, it's just gonna hit a cliff. That's why I've already sold 15 million this year, and I expect that once it hits August, I'm going on vacation. So what is it about an election year that has historically thrown this real estate market into such volatility that it just goes into a bear market? Well, let's dive into why home buyers get skittish for the following reason. Okay. The number one reason is economic uncertainty. Elections lead to a lot of change in government policies, and this leads to changes from the economy to taxation to housing and different policies related to housing that makes homemakers cautious and unsure of what the future interest rates might be.
Interest rates are skyrocketing.
Or the tax laws and just economic growth concerns in general. Which brings into the second one, policy changes. Depending on the election outcome, there could be new policies that affect housing affordability, mortgage interest rates, or even taxes in real estate. Home buyers are worried about committing to a new home because they just don't know what these new policies are going to do to impact their finances. The third item, market volatility. Look, elections lead to increased market volatility from the stock market to even the housing market, with potential swings in stocks and real estate values. Home buyers fear that making a significant investment during a potential unstable period such as elections is just a risky time. Look, the fourth one is the obvious one. We worry about this all the time, but even more so in an election year, and that is interest rate uncertainty. The central banks, they're always looking at how to adjust the interest rate in response to economic policies or to stabilize the economy. And these changes affect, of course, mortgage rates, which influence home buyer decisions. The fifth one is investor behavior. Look, investors are the same way. They're gonna choose to wait to see what kind of election outcomes happen and what that election means for what significant moves that could lead to reduced activity in the housing market or rates or policies that make them investing in real estate a competitive choice. And the sixth reason is sentiment and confidence. The general mood and confidence of consumers is affected by election campaigns because, look, regardless of which candidate you're going for, you have unease. If your candidate loses, you're scared of the what ifs and what could come. But if your candidate wins, everything is fine. So between now and the end of November and the elections, the market is going to be volatile. But buyers still react in the spring market. It's about midsummer when the market just hits a cliff and it'll go silent until the elections get sorted. And then after the elections, either your candidate wins and you're happy, or you settle in the reality of 4 more years of whatever it is. I hope you enjoyed this video, and if you enjoyed learning about the real estate market in 2024, make sure to subscribe down below, and we'll see you again next time. Thanks for watching.
Chocolate chip.